Good afternoon. This is Ryan Trost with SMB Capital. Today I'm going to be talking to you about a trade I made in Airbnb the second day after its IPO. It was a technical trade that I made based off of the tape. It ended up being my best trade in my career, and I'm really looking forward to sharing the trade with you guys.
I mentioned this trade to you guys, I think a couple times. I've kind of alluded to it, and we may have even gone over it a little bit in the 11 a.m. meetings. But it was a key technical trade that I made the second day in Airbnb. And it's a tape play that has become a little bit of a recurring theme in a lot of these IPOs on the first couple of days. And it's offered me the ability to recognize that that is repeating. And I've made a couple really nice trades probably over the past year and a half. Purely based off of these really, really tight technical levels that develop in real time. So the whole idea is, Airbnb, fresh IPO, it was very hyped up. One of the most anticipating offerings of the year, probably the most anticipated, I remember Beyond Meat being very anticipated, but I haven't seen one this anticipated possibly in my career. Airbnb states they operate a global marketplace. You all know the deal. You rent out places to stay at. The open for the trade was definitely extremely volatile, and the opening price settled, I think, double the offering price. Offering size was 3.5 billion, 51.3 million shares. The range was 56 to 60 bucks, and obviously it opened at 146. So it was already way over. A lot of people thinking about buying the opening print for the opening pop. There's a couple different ways to play the open, but this trade is specifically talking about the day two after those technical levels from day one were developed. I'm sure we'll do some type of day one IPO video in the future. The keys that kind of develop the levels from day one that I used on day two kind of have to do with the technical behaviors of an IPO. And that's kind of what I was alluding to at the beginning. Due to the complete lack of price memory, obviously these stocks are just starting to trade. You can see key levels develop off the open, and those levels tend to become extremely important, like way more important than, 2-day VWAP in a stock that's trading all the time, like a high beta, or, a major swing breakdown or breakout, or even anything like that, which you would look to kind of capitalize on in a normal stock. In an IPO, they become even more so important. Things like the opening print, the opening range high or low, key psychological levels, depending on the price of the stock, whole numbers, especially those divisible by 5, 10, or 100. And then finally, levels that develop on the tape in real time. When you see really big bids or really big offers getting stacked, it's more than likely institutional money getting put to work in a stock that is just starting to trade fresh. Also, feel free to chime in if you guys have any questions during the presentation. Just kind of start talking and, I'll answer whatever you have for me. So there's a few things I was thinking about, and how to classify this trade from a philosophical standpoint. Like when you're really looking at trying to evaluate, okay, in a stepwise fashion, what did I do here that really got me to produce a result that I hadn't seen personally? And what it really came down to for me was kind of 3 steps. Identifying something that was happening in real time, watching the tape, noticing big blocks of buyers and sellers, behaviors that I could recognize being, oh, hey, that's interesting. Do I think that there might potentially be a serious player doing something at that level? We're sticking to a price. We kind of maybe we'll blow through a level and then instantly re-offer back down, or buyers will just continue to pop us off of, kind of what might instantly feel like a random price, but turns out to be a very important inflection level in the future. And then once you make those identifications, moving on to, okay, now I have to anticipate what is going to happen the next time those levels get touched. Do I think that I could potentially front run? Do I need to set alerts to see whether or not, okay, maybe there's some other stuff I'm doing and my focus isn't totally here yet. But if my alerts get triggered and those are the really important prices for me, I need to be quick to, bounce right back into those and really start to attack the stock. And that leads us into the third step, which is, react, see those support and resistance levels on the first test, be ready to hit into the market If it's second test of the level, be ready to scale at correct areas, focus on risk reward and kind of do the trade from there.
If you want to learn 3 real-world setups that our traders use, including the simple setup that we teach all of our new traders and the setup that turned one of our traders into a 7-figure big money earner, check out the free webinar that we're currently running. Just go ahead and click the link that should be appearing right now at the top right-hand corner of your screen. That's going to open up this free registration page in the new window, so don't worry, you're not going to lose this video. You're going to learn more in a couple of hours from this trading workshop than from years of online education.
I mentioned this a little bit, but large institutions early on in IPOs, they tend to place block orders at areas where there's more likely going to be increased liquidity. Oftentimes this will be at 25-cent increments. We'll go up $1 and they'll hold it. They'll break a new high. They'll hold it at like 50 cents on the tape or 75 cents or even the next whole number. It's rare usually that price holds exactly to the tick. Often you see like a little bit of slippage and then a reoffer or just general stickiness to that area. But it can happen that those levels hold even to the penny. And if you're reactive enough, obviously that risk reward is unbelievable. If you have a stock that, let's say Airbnb, for example, which we'll get into, if it comes up to like $160 and then it holds $160 to the tick and, you place offers, front run it, 159.90, you have a 10-cent risk. And if it drops out 2 points, 20-to-1 risk reward, you can see why it starts to become really attractive with these day 1, day 2, day 3 IPOs to look for these really important inflection areas because they so often hold very, very tight. Obviously, your tape reading experience and your attentiveness is going to be extremely beneficial. If it's your first time trading an IPO, you might start seeing things that don't necessarily mean anything. You could see it react at a price and be like, oh, I'm going to try there. And then you try again, then you try again, then you try again. You will start to realize what it looks like when these levels actually matter. And that's kind of the key, focusing on, okay, I've seen price hit this level so many times, or, oh, they did just hold it on a major, it's breaking out, it's making new highs, but they held the highs to an exact penny. Let's try it on this one. But if it makes out new highs again, maybe give it a little bit of a break and start to treat the trade differently. So after day 1, there were a couple levels that developed that ended up being pretty important the next day. Opening print obviously is extremely important at 146. The initial high was exactly 165, exactly what I was talking about. They held it to the penny, printed it, and then dropped it out from there. The IPO low was 141.25. 150, obvious psychological level. 150.50 was the previous day's rough VWAP close, and 144.12 was the closing print. So here's how the chart looked. This is day 1 on the IPO. So opens 146, rips pretty aggressively, straight up to 165, holds it to the tick, and then drops out all the way. Quite a candle dropout here. You see this a lot on IPOs, especially when it's day 1. You often have liquidity vacuums where, price slips off of a major high or like, the opening print or a major low, you see it just kind of vacuum because the bids evaporate and people just slap the offers or slap the bids rather, all the way down the tape. You get the liquidity vacuum, it instantly goes to VWAP, and then you kind of get like a trampoline effect. And then the trade actually starts to take place. So you can see those levels developed that I was talking about, all listed here. IPO low, you can see this is kind of the opening range low, oscillated around there before bottoming, I guess, for the day. 150 was held on the tape 1, 2, 3, 4 times, got slipped, reoffered, and that kind of led to new lows, new IPO low. 150.42, you could see that close VWAP, and 141.45, kind of a little bit of a level that got put in on this initial swing low breakdown from VWAP after the open. All of those levels came into play on the next day, but specifically the area that I'm going to be focusing on is 150 to 150.42, because there was a really interesting thing that ended up happening on the tape there. So now that I had, clear levels from day 1, I wanted to formulate the trade based off of where I was most likely to see reactions off of where it was opening, and then kind of just sit and wait. A lot of times people will have a bigger idea in a fresh IPO, like, I think this is a hot IPO, it's going to run, it's going to trend, or this is oversubscribed. way overvalued, it's going to trend down. And they'll try and trade around the core, be involved the entire trading day and give a little, take a little out, and try and work a price and get distracted, and then if they're wrong, it takes you a little bit of time to realize that you're wrong. So for me, I just wanted to wait, let it get to the price, instantly react, and then see whether, is this a scalp? Am I just going to get a quick reaction, take off all my risk, and then realize, oh, hey, this isn't the type of trade I need to hold on to. I'm not walking into anything big. Or am I going to get lucky here, get a breakdown, and then have to adjust my trade to be a swing? It's tough to have that plan beforehand because it's a fresh IPO. The tape is going to be changing rapidly every day, but you can pick up on a little bit of key behaviors that make your entries and exits a lot better. I did feel like the larger time frame slightly favored the short side in this instance. Obviously, most people buying this IPO or getting allocated shares or oversubscribing and things like that, they think, Airbnb is a very solid company. Obviously, it's one of the leaders in the space. I think VRBO is another instance, probably their main competitor. Then obviously legacy hotels and things like that are all competing for the same hospitality group type idea. But you have to think about it, it's highly above the offer price. We're in, a once in 100-year pandemic. Logically, I just didn't really feel like it made sense for this to just trend all day. Maybe the opening buying, some people want to be involved, and then we'll kind of see how the tape developed. But judging by how it closed on day one, I kind of felt like there could be some continuation to the downside, day two. So there were three specific setups, all in the same direction to the short side, but all that kind of led and built on each other to let me get bigger in the next trade and bigger in the next trade, and kind of made one larger idea, the short in Airbnb, a setup that could be, a day making, month making trade. So the first setup was a morning pop to 150, 152 area from day one. I'll go over the charts. The second was a retest of the 150, 150 area. This is when there was a very, very unique thing happening on the tape. And then seller steps down from that original 150 to 50 area, and for some reason decides to hold 147.50 area, and then physically actually steps down to 147.25, holds that to the penny, and then collapses the stock. So I'll go over my executions here, and this is kind of identifying everything. This is just, a trader view chart, clean, no VWAP or anything, because I really just want you to see how the trade develops with the specific inflection points. And on the next chart, I'll have the levels actually marked out so you can see, because drawing lines in trader view is a little bit annoying. Right off the open, you can kind of see where it closed the previous day. It would wick above 150. These are all late prints, but it was kind of really struggling to get up there. So on the open, I thought in my head, it'd be really interesting if they just kind of, and I mentioned that 151.42-ish, 151.50 area that had developed the previous day. I kind of said in my head, I bet you they're just going to quickly pop it above 150, and maybe it stops at 151.50. It's a little bit of a gamble, a little bit of a, if this happens, obviously I'm going to get lucky, but it could be a really nice risk reward area. And the reaction from that level can dictate how I'm going to treat the stock the rest of the day. If they pop it above 150, 151 and fail it aggressively, my first thought is going to be, okay, the next retest of this area could potentially be a reshort, and risk 152. I can risk 1-2 points. If we break IPO low, that's, about 6, 7, 8 points. The risk reward is starting to be really good, even to just swing it. And then if I can use my tape reading skills to get an even tighter entry, now we're starting to see, risk reward wise, this is going to get really tight, and I'm going to be able to size up into that trade itself. Off the open, it pops. This is a 2-minute chart, spends 2-3 minutes getting right back into that previous day's range. It looked like this is a little bit of an imbalance selling. Pops back up. It did exactly what I thought it was. And, sometimes if it does exactly what your plan is, you have to just realize, all right, this is a gift. I have to be quick here. It popped 150. I took a little bit ahead of 151, knowing that I was probably willing to just take a quick stop above 152 and kind of just see what happens. It reoffered 151, and the tape stepped down 150.50. As soon as I saw that, I hit my second lot, went all the way down to 146, and I said to myself, 152 is my stop. there's not really any reason for me to scale out of this. If anything, I need to be thinking bigger, targeting the low of the IPO. It didn't really make sense in my head to quickly scalp out of this and be too reactive and like spam out of it, take some off, reshort, because ask anybody around the firm, and a lot of us feel like if we start moving our average price down by trading in and out, there's a little bit of a psychological negatives that come into play where I'm like, oh, now I'm moving my average price, if I reshort here, after taking some off, my reshort, now my average price is 158. Am I going to hold all the way back up to 150, 151? Am I going to be shorting the whole way up? Next thing you know, I take an entire average above 152. So I really just wanted to keep the larger time frame, swing and play, use 150 as an inflection once we got this kind of breakdown towards the previous day's close. Use that 150 as an inflection and just kind of build into it and see what I could do. So I was shorting every pop, comes down, shorted another pop. It went a little bit further than I thought. Couldn't break 150 and I shorted again. Then as it started to tighten, the trade started to change a little bit. And I said to myself, okay, if it breaks 150, I'm pretty sure I'm going to get slipped. I'm not quite sure where it's going to slip me to, but the type of size I have right now, I'm not really too interested in getting slipped the whole dollar. So I'm going to take a really quick stop above 150. If it gets there, reevaluate and potentially look for a tight area on the tape if that seller from previous in the day at 151 is willing to step down. So as the trade's developing, it's important to not get wrapped into the mindset where in real time you're like, oh my God, I haven't covered any. I'm short. I didn't take any off down here. I didn't take any off down here. I didn't take any off down here. As it starts to compress against me, yeah, I'm looking more and more like I'm going to be wrong on my initial idea, and I'm going to have to be really flexible and nimble back towards my entry price. And sure, I missed out on a decent amount of profit down here, but the idea in my head was, I think this is going to break the previous day's low and go to my targets, which are much lower than where I'm willing to flick in and out. Depending on your personality, some people are better at holding cores, right? Some people can trade around cores really well. I've identified myself as not being able to do that. When my average price gets mixed up, I start to get distracted. I start to move my stop down. I do kind of key little slip ups, rookie type mistakes, all because I'm over trading it. The idea here was I have my targets. I know where I'm wrong. I'm going to try and size into this.
Ryan.
Sure.
When you're reshorting at 148, 149 there, how much are you adding relative to your original size on the
right here?
Entries? Yeah, like there and the few before that. Are you doubling your size? Or are you adding like quarters, or like how are you thinking about the size as you're adding there?
Yeah, let me quickly double check the exact lots that I was using. I just want to make sure I don't confuse myself here. I'm just going to use TraderView real quick to get the exact lot sizes. Okay, so I'll just give it to you in reference here. My initial position, I was using like maybe 1/10 of what I would ideally want to get. And I guess it kind of depends. Like, I'm just trying to make sure. I can't say the exact share amounts. I can't say the exact share amounts, obviously.
Well, just relative to your original entry, your original, where you.
I'd say on these reshorts or this reshort, just to double clarify.
Just the ones at like the first ones, the ones at like 10, 1030, 1020.
This was one lot, two lots. This was a half lot, another half lot, another half lot. So I got all the way up to like tier 3 right here. And then as it came up to 150 again, I got to tier 4 and then took a quick slip on it. But then once that happened, this is kind of where I started to realize, all right, this trade is starting to become something different. I barely took a loss. I don't actually think I lost anything. I think I brought my average price actually hitting here, here, and here. My average price came from like 150.80, 150.70, and it came all the way down to like 150.14. So when I took the slip here, I was flat on the trade, and I was like, all right, I'm just going to reevaluate and see what happens and see, are we going to fail from 150 again, and then maybe wipe out this entire, wedge that formed? If that's what happens, obviously this trade kind of is going to be, okay, a lower high, sure. And if it fails from there, we're definitely going to take out lows. So that was kind of the idea. I took a quick slip on it. And then as it re-offers back down, if any of you guys are watching this live, between 150 and 150.50, every time it pushed above like the 25-cent level or 30 or 40 cents, it would like get really close to 50 cents, and then just a massive offer would come in and sweep everything back underneath 150. So that happened once here, and this candle, this is a 2-minute chart, but this candle literally happened in like 15 to 20 seconds. It popped up to 150.50, and the seller just destroyed it all the way back down. They held 149 to the tick. It snuck back up again. You can see I was like starting to short again. I just put a short here. This is my first short. And at this point I was like, all right, 150.50 is where I'm going to set my stop. I was in 1, 2, 3, 4. I took 5 entries to get up to tier 4 or tier 3 and then tier 4 here. So my relative size was like, yeah, let's just say that was 4 tiers. Because I just want to make sure I put this in perspective here. I want the lot sizes to make sense to you guys listening without giving away how many shares I was, because I can't.
You basically got back in what the amount that you had before right there. It sounds like.
No, so that's where it gets interesting. Because I saw this tape developing, I actually ended up getting this entry right here was already double this entire size. Because I didn't take any loss on the trade, and now instead of my risk reward being 2 points on this original tier 4, technically I was in 8 tiers, right? Like I got huge because the risk was smaller. Size-wise, I had double the amount of size on these entries right here with a 150.51 stop. Because I saw that seller stepping down, I was like, oh, now I have 50 cents of risk. I can get 4 times bigger, but I didn't get there yet. And then it came up a dent. I think we had a question.
I was just gonna say, for the perspective thing, like how many lots did you have when you were full size for this trade, or the max size you got?
Eventually I got into, I guess technically almost 15 lots.
Okay, wow, yeah.
Because, and I say 15 lots because that's relative to the original trade. Relative to my stop,
Yeah.
at that time I was probably risking almost half my stop. Yeah, almost half my stop. By the time I got fully in here, I was risking about half my stop.
If 150.50 lifted, I was long from like 148. Did you think that it could open up maybe $1 and get super thin above that?
Yeah. So I say my risk was 50 cents, and technically it was. I was pretty sure I was going to get blown out above 151. I was pretty sure, judging by the liquidity that I had seen over the previous day and that had been developing on this day, and judging by the slippage originally over 150, I did think that worst possible case, I was going to get sprayed all the way up to 151, but I did think I was going to be out by 151. So, it's tough to say because it didn't happen. Maybe I would have gotten perfect fills and only lost half my stop, but it is interesting to note that the size I had I gotten slipped above 151, it probably would have been pretty bad. But, the trade itself had 1, 2, 3. By the time I was full size, there were 4 held offers at that level, and the size was incredible. You guys, if you were watching the tape in real time, they would just wipe the entire order book back under 150. And that was really, really rare to see. It's so strange when the tape does something like that. But yeah, so at that point, once that candle hits, I'm in full size. And you could see the fact that once I get this dropout candle, I was way too big for what I felt like I would want it to be in based off of where my day was at that time. Like, obviously I was like very controlled here, 1, 2, work my way in. But I do really well at identifying these really tight levels. And if I don't put the size on there, it's obviously going to be impossible to make the amount that, I thought it deserved. When you see an A+ setup, and I've been trading IPOs off these very specific levels for probably like maybe since May of, 2018? I guess 2019. Over a year and a half, I'd say I've been trading these specific levels. Like, I've built my playbook out in these, going all the way back to, I can't even name all the IPOs that I've done this on. So I'm kind of used to trading these specific levels on the tape, but I've never seen it this clear, and I've never put on enough size. And every time it happens and I miss it, I'm like, they just held 25 cents or 50 cents for no reason. I saw it so clearly on the tape. Why didn't I just risk 10 cents? And if I got blown out of it, I think if this trade happens 1 in 20 times, I'm still going to make money overall. Just because the risk reward, I'm risking 50 cents. And if you look, I end up on the initial drop, I already made back my risk. Right here, I'm up. This was 3R already. Drop out here for 4.5 points. At this point, I'm already up like 8R. And this isn't even the full trade yet. Like, I haven't even shown you guys the actual trade yet. Like, this is my first original entry. To be fair, this specific move, I made over my stop. I think I made like 1.5 times my stop on this trade. But what ended up happening much later was what made me feel like, okay, now I've built up all this P&L. And, the rest of the trades here is pretty self-explanatory. You get the dropout. I trimmed off like, let's say I was in 15 lots. I was down to like 10 lots here really quickly, take a third off just because I felt like I was oversized. And then I really slowly trimmed off here, like 1 lot, 2 lots, 3 lots, 4 lots, 5 lots. And then I took a lot off down here, but not everything. I was probably down to like this original size by the time it came down to 143. Now it's a swing. I still think it can go sub 140. The next bounce is going to be really important because I don't know who was doing what up here. I don't know why. All I know is that whatever they were doing up here, whatever this seller wanted to do, maybe it's someone huge who was trying to get out of a bunch of shares they were allocated. I honestly don't know, and I don't even really necessarily need to know. All I know is that the level on the tape was so clear, I was able to hit it. And then once you get confirmation and it kind of wipes out all these people who've been buying in this compression, now we have a trade where the next aggressive bounce is going to be the trade of the day. I just need to try and figure out, okay, am I going to have to scale into that and use a really good normal risk reward, or am I going to have to see another level on the tape where whoever this is steps down to? It's rare that someone would hold the tape that strictly and then step down and do the exact same thing again. But lo and behold, that's actually what ends up happening. Any questions before I move on to part 3 of the trade? This is part 1 and this is part 2. So let's look at this chart again, obviously without the entries. These are all the levels plotted. We got the pop. I shorted up here, was kind of shorting every pop, shorting this pop, holding, got wicked in. You kind of see this behavior on a 1 minute. They push it back down, push it back down. This wick was like 10 seconds, wick it back down, wick it back down. So it ends up happening on a 1 minute chart. It's even more clear. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 times that this guy holds 150-50. Like I didn't know why this was happening, but I just knew that the risk reward was so good. If I could get this within 50 cents, I'm going to get probably 8 points out of this trade if my thesis is correct. So obviously I scaled out into all of this, had some levels from the pre-market that I wanted to take risk off into. And then the next idea was, all right, when it pulls into VWAP, what am I going to do up there? By that time I had like, a few shares left, nothing too big. And my initial reaction, I had made, actually, I'm looking at the P&L and trade review. I'd made exactly my stop on this overall trade. So I, in my head, thought, all right, if there's a clearer level, I can now risk the same amount that I risked originally. If I'm wrong on the day, I'll still make half my stop. But if I'm right, I'm going to have the biggest day of my career. That's kind of a product of my personality. And don't get me wrong, like that gets me into trouble a lot. And it's something that I'm working on, trying to figure out when the trade deserves the level of aggression that my personality wants to attribute to it. Everybody's different. Some people are risk adverse. Some people are really prone to risk. Some people, are always looking to get big, always looking to capitalize on when they see their A+ trades. You have to find that balance, and I'm still trying to find that balance, don't get me wrong. But in this specific instance, I felt like I had significant edge trading these IPOs, day 1, day 2, day 3, and I really wanted to step into it knowing that I had a really nice buffer. It was already starting to look like it was one of my better days of the month in December, and I really wanted to step into it. The year was ending, not sure how much more opportunities we're going to get, et cetera, et cetera. You could, in real time, attribute your proclivity towards risk to anything, but for me, I just felt like the risk reward was too good that if this took out lows, made new IPO lows, and I had the kind of size that I'm going to get with 50 cents of risk, this is going to be an enormous trade for me. I just need to figure out where that level is going to be on the retest. So I wasn't really doing anything, to be honest with you. I kind of just wanted to wait and see what happened at VWAP. I was waiting. Obviously, it kind of grinds up, but no weird behaviors on the tape, normal stuff. Kind of watching this 146, which was the opening print, but it hadn't really respected it at all. So I wasn't interested in shorting around that, even though the first pop held it to the tick. I wasn't really involved re-adding or anything. It's kind of oscillating around, never really holds it cleanly. Then it will hold it, but then it will wick above. It's kind of just trapping people who were paying too close attention to it at that time. Obviously, it's like 12:30 to 1 o'clock, perfect hours to start getting confused and starting to overtrade. I knew like after 2 o'clock, it would potentially be time to step into it. So the next area where I really started to notice that there was something going on in the tape, again, very similar to whatever block seller was up here, was right around like 147. So like this pop right here goes to 147.50, literally to the tick. They step down and then they start holding it to the quarter, like 147.25 to the tick. They hold it one time there, 2 times there, 3 times there, 4 times there. After the 4th time, as it's kind of like sitting at 147, I said in my head, I'm like, all right, now I have 25 cents of risk. If it pops up above 147.25, I can always just size down, kind of short into VWAP, be a little bit more patient, kind of see if it'll pop all the way back up to 149. Maybe it needs to retest this kind of consolidation here where we kind of started to curl up, 148.50-ish, maybe the original breakdown. So I was okay if I got taken out above 147.25 because I was going to reshort anyway. And I still had the idea that, if you block out all of this, obviously, I still had the idea that we were going to make lows. So, 142.50-ish, shorting 147, 5 points of risk. I could give it all the way up to 150 and the risk reward's still okay. But the odds of it actually rolling become less and less, obviously, the more time it spends up here back in this, developing morning range. Anyway, after the 4th time I held 147.25, I was like, all right, I'm just going to go for it. If I lose 25 cents on this size, it's not going to damage me too much. I'll lose half of what I've made on the day, but then I can kind of take a fresh look at it and reevaluate and see what happens. I think I put on the exact same amount of size, 15 lots again, comparatively to what I had earlier. Half the risk now, so I even could have been bigger comparatively to my stop, risking half my stop again. I probably could have risked my whole stop, but it's tough to say. Like, obviously you could be like, oh, you would have made so much more. The risk was tighter. Why didn't you get bigger? I mean, I was already risking half my stop. I was being hyper aggressive, willing to give a decent amount of my day back, which is a little bit dangerous. But obviously, if you want to swing for the fences and you see an A+ trade, that is what you have to do. And that's how you have to react. So I ended up getting 147.06 or 147.07 on the lot. And my stop, I kid you not, was 147.26. And it held it perfectly to the tick, broke down. I actually stepped away from my computer for, I think, like 3 minutes to get a glass of water. I came back and it was already underneath 146 and I had all that size. And I was like, well, I'm not going to cover any here. It doesn't really make any sense. They just vacuumed us down. I'm just going to see what happens. So I actually took my dog out to my roof to go to the bathroom, brought him back down, and we were down here at 141. So there's a little bit of luck in holding it, but my target was under here anyway. Like, I wasn't going to take any off under 143 because I knew what I was going to make if it kind of dropped out like this. I didn't think that it was going to do this. Like, this initial part of the move where it kind of took out 140 and took out this pre-market range, that didn't surprise me. It surprised me, obviously, how quick it went. But, I knew it was an IPO and it had the opportunity to, have the liquidity vacuums like this. But once it kind of really went right here, let's see if I think my executions are on the next page. So you can see where I got short, set my stop, didn't do anything here. It hit my target, which was like right at 142. And I took my first lot off. And at that point, the tape was moving so quick. I was like, all right, I just want to see kind of where this is going to go. Maybe it actually drops out and starts to build on itself. Like, this thing was priced, what, like $80 lower. like you kind of have to use your imagination and just think about the range that it's expanded, how much energy it's used. You can't really use ATR or anything like that, but you really just have to look for like capitulatory type action on the volume. And that's kind of what we started to get in this candle, but you could see like I wasn't anywhere close to covering lows on this. I was really trying to read the tape down here, but it was pretty crazy. I hadn't seen, a stock move like this day 2 off an IPO. Like day 1, usually you get moves that are this violent, but like day 2, this was crazy selling. So I did my best to get out, at the best prices I could, but I was out ahead of 138. Obviously collapsed to 135. I think I had like a little bit of size left. I don't think this got me flat. I probably had like 2 tiers left, like something really small. Out of like the 15 I started with, I got down to like probably 10 here, down to 5 here, maybe 5 or 3, something like that. And then I was reshorting the pop, just kind of using levels, reshorting, covering dips. And I didn't really make too much. And then I ended up covering the whole thing back above 140 when it kind of spiked back up here and just left it alone because it was getting really close to the end of the day. And it didn't quite roll like I thought it could into the close. But yeah, the main part of the trade was recognizing this level develop at 150.50, using it, setting the stop to as tight as I needed to, and then seeing that seller step down to 147.25-ish, hitting it again. And obviously, we get the collapse, and I did my best to cover. It was pretty violent on the tape. And it could vacuum back up $2-3. So I had to be a little bit careful and kind of sell into the down moves. And that's why, the down moves move a little bit quicker. I'd rather be selling into the weakness than be selling as it's popping back up against me. It's a little bit better psychologically for me to sell into those down wicks. If it goes a little bit further, I'm like, oh, that's okay. I still have a little bit of my core left. And that's kind of a better way to think about it for me. But yeah, any questions? That basically wraps up, the trade in the whole. If you guys have any other clarifying things you want to ask.
Thanks, Ryan.
Yeah, thanks so much for listening, guys. I appreciate it. Happy New Year. And as always, reach out if you guys have any questions about this trade or really anything in general.
Hey, go ahead and click our subscribe button so you don't miss any of the videos that we're producing for you in the trading community. And please take the time to add your feedback in the comments section for what videos you'd like for us to produce next and what you found helpful from this video. From all of us at SMB, train and trade well.